Markets see a broad-based fall with frontline indices falling anywhere between 2 to 3%. Broader markets fall more. BSE-listed companies, market capitalization of 8 lakh crore erased today.
The high-flying public sector stocks see some profit-taking after many days of non-stop rallies. Stocks in the railway space, names like IRFC, IRCON, RVNL, RailTel, RITES under significant pressure. The Nifty PSE index is down over 1%. The PSU bank space also sells off 1.5%.
Zee Sony merger terminated. The stock slumps over 30%. Brokerages sharply downgrade their rating and price target on the stock. Sources tell CNBC-TV18 that Zee sent 2 proposals as alternatives to Puneet Goenka's position, but Sony informally rejected both the proposals.
Hello and welcome to a fresh new edition of Markets Forward, the show where we aim to get to you everything that you need to start another trading session. I'm Prashant, with me, my colleague Reema Tendulkar. Reema, hi.
Hi, and we've got a lot covered for you in the next 20 minutes with all the big news, the key developments in Dalal Street, corporate voices, and the events to track. But Prashant, the day was ugly, right? And we didn't see it coming because Asia was pretty okay when we started trade. Hang Seng, in fact, ends with a gain of 2.5–3%. And look at us.
And the point is that we actually made a higher high
on
today. Saturday, a higher high on Friday, and then today we made a higher high as compared to Saturday. And then from there, the market sold off, so it feels even more sharper in that sense. It is what it is, right? I mean, it's a short 3-day work week, but today the market really broke through some important levels. The recent low was gone, that is 21,285, and we left off at about 21,240. That is point number one. A mix of factors, right? It's, of course, the sharp run-up, which is the backdrop to everything. Everything is done so well. But incrementally, the market needs triggers. And an important one, of course, was HDFC Bank, where there has been disappointment. The stock has done poorly, and the Nifty Bank, consequently, has been hurting what the Nifty has been doing as well. There was that Zee setback. It's not so much about what Zee's weight is in the index, but, I mean, it was a large deal. People were expecting it, and, it's a 25–30% knock on a large name. Earnings, of course, I think that's a more worrying kind of trend because this earnings season, so far at least, we've not had any big earnings beats or anything. At the margin, there have been disappointments, but too early to take stock of what the full quarter numbers look like. Broader market felt the heat. The Nifty mid-cap and small-cap indices both by close down. I mean, actually, the mid-cap index down full 3 and the small-cap index down just about 3% or so. Now you're left in a position where you're looking at supports, right? The way to do it now, of course, would be to look at retracements of the full rally. When I say the full, I mean the rally which began in October of 2023 and which extended to the all-time highs. And the all-time highs came in different months for the Nifty and the Bank Nifty. For the Nifty, it came in January, 16th of January 2024. And if you take a Fibonacci retracement of that October to January 16th high, the first support comes in at about 2,900, not 21,900, 2,900. That's a 38% retracement. And then for the Nifty Bank, the support comes in because it's much weaker, the 38 there is gone, the 50% retracement is gone. You look at the 61.8% retracement of the October low to the all-time high for the Bank Nifty that was made in December, and that comes in at about 44,600 kind of levels, not very far away. I mean, as of today's close, we're about 400 points out, about 1% out from those levels. And that's really the problem. The Nifty banks and no support there, no stocks really performing, no leadership, I think is the big problem which the markets are facing. Reema.
And it's also expiry, right, in 2 days for the month of January. And January has been a weak month for us. It was historically a seasonally weak month when January, has historically sold off. But the Nifty is down about 2.25% in January so far. Mid-caps are up 0.8%, and the Nifty Bank is down 6.7% in this month so far. The advanced decline ratio is quite ugly today. One stock closing in the green for 6 in the red. The big drags came in from IndusInd Bank, HDFC Bank, PSUs like Coal India and ONGC, and on the gaining side, the only sector which ended in the green was the pharmaceutical sector. The Nifty Pharma Index up 1.5%, led by Cipla and Sun Pharma, and Bharti Airtel has been showing strength over the last couple of days. But here's a lineup of what we have for you in store today. We start with the top market movers of the day. Hormuz joins in. The stock of the day is Zee and Cipla. Shares of Zee Entertainment slipped after Sony pulled off the merger. Cipla gained in a weak market on the back of stellar Q3 numbers. We'll also tell you the key reasons why these stocks were buzzing. Last but not the least, we delve into the key market events to watch out in tomorrow's trading session. But let's get to the first segment of the day. Hormuz joins in. He's at the big wall with the top stock movers of the day. Hormuz.
You cannot not talk about Zee Entertainment when you're talking about the top movers of the day, and even if it is on the downside, and even if the stock was in the F&O band, the kind of fall that you saw, 33% lower today on Zee Entertainment, the biggest fall on record, and 7,000 crores of market cap gone. Sharp downgrades coming in for brokerages. Things not looking good there for Zee Entertainment. 156 now on the stock, which is even lower than most of the price targets prescribed by the stock. The other pain point was HDFC Bank, as you highlighted earlier. 87 points contributing to the nifty downside. The market cap fell below 11 lakh crore rupees today, and it is having its worst month since March of 2020. Another 3.5% on HDFC Bank. Earnings have been a bit of a disappointment, and even slight misses are getting hammered as a result. You see Oberoi Realty down 9%. Indoco Remedies, there are a bit of margin troubles there, 9.5% there. REC came out with results. It recovered from the day's low after the numbers, and yet it ended 5.5% lower. IDFC First, after the numbers, ending 7% lower, and even Coforge, even if it maintained the guidance, ended 1.5% lower. Some of the high-flying PSUs, the IRFCs and the RailTels of the like, almost 75% gains in January. They had to see some profit-taking someday, and it happened today. 8.5% there on IRFC, 12.5% on RailTel. RVNL was down 10%. IRCON another 15% shaved off today, and IRCTC also in the F&O band today, but lost 9%. The other major sectoral loser, other than the media names, was real estate, and that saw the real estate index was down 5%, and prestige estates, they're down almost 12%. Sobha, Brigade Enterprises, DLF, Macrotech also among the losers, but all was not red. Some of them were in the green as well, and some of them were on the back of some very good earnings, and those were the stocks that were bucking the trend, and Cipla was one of them among the top gainers on the Nifty today. Persistent Systems was also one of the few stocks that were rewarded because of their good earnings, and those were some of the outperformers in today's session. Petronet LNG, Karur Vysya Bank also after numbers, another 7.5%, and Global Health completes that list of gainers. Back to you.
That's an exhaustive compilation of everything which happened today. Hormuz, thanks very much for that. Well, Shilpa Rout, the Prabhudas Lilladher is with us to run us through what she made of things. Jay Bala of CashTheChaos.com is also with us. Thanks very much, Shilpa, Jay for staying back. Appreciate it. Jay, does this have the look and feel of a bit of a turn, a top? And if it is, what kind of levels on the downside would you project?
Yeah, thanks, Prashant. It does look like a top has been registered as critical supports that I've been pointing out have been broken, and the banking index has definitely taken a turn for the worse. And the sector leader, HDFC Bank, has had a significant turnaround. I mentioned last week that if 1615 were to go down, I'd use the words floodgate. Floodgates would get opened, and I mentioned a couple of levels on SBI and the banking index. All of them have been broken, and the markets behaved exactly as per anticipation. And when it comes to the Nifty, I would initially think that this market is projecting it towards the late 2023 low, about 18,800, but intermittent bounces. So this is looking like a significant turn for the market, and we just have the global cues yet to come through. They're also looking like they are also frothing, but we don't have a turn yet. If that too comes through, definitely we are adding more pressure to the market.
Okay, that's the view coming in on the markets headed lower. The stock of the day was Zee Entertainment as it tumbled 30%. This is after Sony pulled the plug on the mega merger with the company, which had been in the making for close to 2 years. Sony sent a termination letter to Zee, citing that the closing conditions were not satisfied by the end date. Sony said that the discussion period has expired without an agreement upon an extension of the end date. We learned from sources that Sony never formally asked for Puneet Goenka's exclusion from the proposed merged entity. We also learned that Zee had sent 2 proposals as alternative to Puneet Goenka's positions, both of which were informally rejected by Sony. Moreover, market regulator SEBI's investigation into Zee has revealed the company's promoters have laundered a much higher amount. Sources have said that the amount siphoned is in the range of 800 to 1,000 crore rupees. Yash is here with the details. Yash?
Well, that's correct, Rima. So, of course, the stock already struggled with the news of the merger between Zee and Sony falling apart. Moreover, what we were given to understand from our sources is that market regulator SEBI's investigation against the promoters of Zee Entertainment, that is Puneet Goenka as well as Subhash Chandra Goenka, is in its advanced stage. As far as the timeline is concerned, sources indicate that the investigation should end in the next 2 to 3 months, post which, of course, show cause notices to the concerned parties will be sent from market regulator SEBI, post which, of course, depending on the response, there will be orders against them. As far as that investigation is concerned, market regulator SEBI had asked the Securities Appellate Tribunal that they will take about 8 months to complete that investigation against the promoters of Zee Entertainment. And as far as the initial phase of the investigation is concerned, market regulator SEBI had an amount of about 200 crore which was in question, which was allegedly siphoned off by the promoters, and the promoters benefited out of it. That amount, as far as the investigations progress, has reached 4-5 times of the original amount, has reached at about 800 to 1,000 crore rupees, which SEBI believes has been siphoned off, and the promoters benefited out of that siphoning of funds. Also, as far as the action that we're given to understand, market regulator SEBI will be sending show cause notices as soon as the investigation in this particular matter ends. And as far as the timeline is concerned, as I said, would be the next 2 to 3 months. We've written to SEBI as well as Zee Entertainment on this particular query. Zee Entertainment has declined to comment on this particular development. We are still awaiting a response from SEBI.
Thank you very much for that. Shilpa, all levels have been smashed perhaps on Zee Entertainment, but you want to weigh in on the price action seen today?
Rima, talking about price action for Zee, as of now is completely out of context. 155, the levels we are seeing now, we don't see any near-term support. 140, a level that one can just watch out for, but nothing. I mean, there's no any sort of recommendation also right now for sell or buy.
140 maybe just a near-term level to watch it, but coming on the markets too. Jay was telling us his view that we are headed lower from here. How have you read the sell-off today?
Talking about the indices, we see that 21,200 was supposed to held today, and that is where we saw that market just closing. So going by the price fall today, we might see that levels breaching tomorrow, and we might head towards 20,800 on near term. So that is where the levels for for concrete support likely is going to come in. So 20,800 should be the level where again positional accumulation can happen for long term traders. For Bank Nifty, yes, Bank Nifty is a little difficult from here. It's a mixed bag right now. The levels, the 200 DMA levels are very close by. But if you see Nifty falling another 400 to 500 points, so in that context, Bank Nifty can again see a washout towards 1,500 to 2,000 points. So Bank Nifty, I would be more cautious than Nifty right now.
Okay. Shilpa, stay with us. Just coming to you for more. But we want to talk about Cipla, right? It was up 7% on the back of very good third quarter numbers. Beat expectation on all parameters. The company reported its highest ever margins and revenue growth and was majorly led by the US business. Ekta is here to sum up the numbers for us. Ekta.
Thanks for that. Well, yes, definitely a very good quarter which came in for Cipla this time round. So the revenue, for example, was up around 13.7%. The street was anticipating around 11% growth, so that was better than expectations. The margins were the real kicker because it came in at 26.5%, one of the highest levels in terms of margins that they've reported ever. And this compares to an estimate of around 24% and versus 26% in the previous quarter. So they improved sequentially as well. And that trickled down in the profit, which was higher than estimates despite an outflow of 195 odd crores. Now, in terms of the geographies, US sales was very strong, $230 million, 15th consecutive quarter of a growth and higher than estimates of $218 to $225 million. It was supported by the key drugs in their portfolio, such as Revlimid generic, Lanreotide, as well as Albuterol, along with their base business. India grew for the third third consecutive quarter in double digits. It was up around 11.5% on a year-on-year basis. Despite international markets and API being flat on a Q-on-Q basis, the street liked the numbers, and also with the fact that they actually reported such strong US sales despite having US FTA issues in their Goa as well as their Indore facility. Now, Bernstein has written on the stock, they have an outperform in the target price of 1292 rupees. According to them, the margin improvement sustained, the revenue growth was slightly above estimates. The multiples on FY25 PE basis remains at a reasonable pace and a discount to the likes of Lupin and Sun.
Thank you very much for that. And staying with earnings, some banking names reported their results for the third quarter. The outlook on loan growth slowed for IDFC First Bank. IndusInd Bank too missed street expectations on asset quality, while Spandana Spurti saw a decline in their net interest margin. However, ICICI Bank reported its lowest NPA ratio in 9 years. The stock closed up with a gain of 2%, ICICI Bank, but came off from the day's high. Abhishek is here with a wrap of these numbers. Abhishek.
Well, Rima, to begin with IDFC First Bank, the outlook on loan growth going ahead for FY24 to 29 has been put down to 20% growth rate versus 25% plus kind of a CAGR that you have seen over the last few years. So annualized slippage ratio has been north of 2.5, 2.7% for 12 quarters in a row. And, valuation expensive as per analyst estimate, given the fact that the bank has actually, cut down on the loan growth. So ICICI SEC has downgraded IDFC First Bank. Rating is down to hold from add. Target price cut to 85 from 100, and they are expecting 300 to 400 basis point reduction in their FY25 to 26 estimate in terms of loan growth. IndusInd Bank asset quality miss has street worries. Slippages did spike up on a sequential basis. Worries now on MFI portfolio, given the fact that entire BFSI sector is seeing stress coming in from the microfinance or the rural economy. Slippages increase more than 20% quarter on quarter, and they need deposit growth to now outpace loan growth, as the CD ratio is on the higher side, is what analysts tell me. Spandana Spurti, sharp decline in net interest margin and asset quality has deteriorated. So net interest margin was down 50 basis point YOY and about 80 basis points sequentially. Gross NPA in absolute value increased more than 22% quarter on quarter, and in terms of gross NPA ratio, it inched up by more than 21 basis point on a sequential basis. The decline in NII was about 3% quarter on quarter, which led to operating profit declining by 8%. In terms of ICICI Bank, it was a mixed set of numbers, but more on the positive side. So good part is that the gross NPA and net NPA ratio are the lowest in 9 years or even more. Deposit growth of 18.7% YOY is perhaps the second highest deposit growth that they have seen in last 11 quarters. On the flip side, sequential deposit growth was the lowest in last 6 quarters. Subsidiaries PAT at about 1,994 crore is the highest quarterly PAT that you are seeing for the subsidiaries. On the weaker side, core operating profit growth was at just 10.3% YOY, which is the lowest in last 17 quarters, and net interest margin is at 5-quarter low, although the bank has been guiding that the net interest margin will decline, and even in this con call, they said that Q4 margin will be lower than Q3. In terms of their performance, both the NI and PAT were ahead of the poll. Back to you.
Okay, well, Abhishek, thanks very much for that. Jay, within banks, what are the most convincing trades to your mind?
Yeah, probably ICICI Bank right now, it's the one that's still not reversed. But and I had mentioned last time that 620 was very critical for SBI. And most of the PSU banks, if you look at the PSU banking index, they seem to have topped out significantly. But, we want the Nifty PSU index to drop below 5,600. Then that will confirm a major top for the Nifty PSU index. So, ICICI Bank is a contra trade, whereas the PSU sector shorting over there might be trading with the trend, change of trend.
Sorry, ICICI what levels, and the Nifty PSU what levels?
Today's high of 1,050 is the stop, and with that, its potential to drop is about 920 for ICICI.
And PSU below what level, you said? 5,600
is the confirmed break point. And once that is done, we might see a complete retracement to the move of the COVID lows to the recent high. So it might be a significant top for the PSU banking day. So we draw, from the COVID lows, you can draw 61.8 Fibonacci retracement to the recent high. That will give you the price objectives.
Okay, we're left off at 5,800 today. Thanks very much, Jay. Shilpa, good to have you as well. and appreciate your time here on CNBC TV18. Well, we'll take a quick commercial break here. We'll come back with some corporate voices and, of course, the events to watch out for when we come back tomorrow. Stay with us. Welcome back. You're with us here on Markets Forward. Let's take note of the top corporate voices that we got to you through the course of the day. Coforge first. It reported a decent set of numbers in the third quarter. CEO and Managing Director Sudhir Singh told CNBC TV18 that they will end the year close to the lower end of the revenue sort of growth that they guided for. That number is 13 to 16%. So they said they should be closer to the 13% number. He went on to say that FY24 margin will be similar to FY23 levels. Fourth quarter should see some significant uptick as far as their EBITDA levels are concerned.
Canfin Homes too was on our radar on the back of the Q3 earnings. MD CEO Suresh Srinivasan said that 96 crore of their gross NPA is due to the restructured book and they don't expect any more pain from it. Speaking about disbursements, he said they expect 3,000 crores per quarter next year and assets under management growth of about 15 to 28%.
All right. Well, there's some commentary from companies we spoke to during the course of the day. Before we wrap, we bring you some key events to watch out for. And of course, the biggest event, which will continue for some time, are earnings. Mangalam is here standing by to tell us exactly that. Mangalam.
Earnings indeed. But, I will be watching out for the way HDFC Bank's statistics stack up because the stock is down 17% in the month of Jan, which is the worst month that it's seen since March 2020, which was a pandemic month. Delivery volumes and the stock move will be extremely crucial to track, not just from a Nifty bank, but a Nifty perspective as well, especially given that we are in the expiry week for the month of January. Talking about results then, the big two-wheelers tomorrow reporting numbers. Bajaj Auto, good numbers expected, 27% jump in the revenue, EBITDA growth of 32%. Tech M as well, extremely important, where dollar revenue is likely to decline by about 1%, but margin expansion is something that the street is penciling some hopes on. For Tata Steel, it will be the EBITDA per ton for both India and European operations that will be extremely important, more than the reported numbers that the company displays. TVS Motors, the other two-wheeler, will be important. Revenue growth of 25%, margin expansion a lot more. We are expecting a 40% jump in the company's EBITDA itself. Some other important numbers that will come by as well tomorrow. We'll have the likes of Birlasoft, Canara Bank, Balkrishna Industries, the two tire majors, Seat along with that, and also IOC reporting their numbers, and a bunch of stocks that we'll keep an eye out on post results in today's trading session. And finally, watch out for Zee. It has been the stock of today, but there were a lot of large trades. What do the institutions do? What the delivery volumes would be? And more importantly, does the stock come out of F&O ban or not is the big question we'll get an answer to tomorrow.
Okay, thank you very much for that. And with that, it's a wrap on this edition of Markets Forward. Thank you for watching.